IT sector is the significant contributor of Indian economy with a revenue of approximately $254 billion in FY24 and employs more than 5 million people. Approximately $200 billion of revenue comes from foreign exports only. US and UK being the major market makes India world's back office. As of 13th August 2025, the Nifty IT index sits at around 34,664, down roughly 25% since its peak of 46,089 in December 2024. Now with this decline, IT sector is crowned as the worst performing sector in 2025. Hey folks, Rachana Ranade here and I welcome you all to a very important video because like I said, the entire IT index has dropped by around 25%. But what is the percentage fall in other big IT players? If you want to have a look at this, TCS is down by almost 33.9% from its 52-week high. Infosys down by almost 29%. HCL Tech 25.5%. Wipro 26%. LTI Mindtree 25%. All these are big numbers. Of course, I did round it off, but it's not at all comfortable. So in today's video, what are we going to do is we are going to talk about 5 key drivers behind this decline. We are going to discuss them one by one. I'm sure you will find a lot of value in today's video. And so, of course, keep on watching the video till the end. Before we move on, a quick and important announcement. Har Ghar Investor is coming to Ahilyanagar on the 14th of September at 11:30 am. Well, this session is going to be conducted in Marathi. I'm going to talk about how, when, and where to start investing. We are going to talk about emerging investment opportunities. How can AI be used as your superpower is also what I'm going to discuss. We are going to answer key points, something like, will 1 crore be enough for retirement or not? We are going to talk about whether stocks or mutual fund, which is the right tool for your long-term goals. And of course, I'm going to also talk about my target for Nifty. So please don't forget to book your seats. It's happening on 14th of September. The link is there in the pinned comment and in the description box below. Now let's get started with the 5 key points that we have to focus on. I know you can't see them. We are going to focus on them one by one. What is the first one? Sluggish global tech spending and weak client demand. Now let's understand. Our India's IT export revenue, out of entire export IT revenue, 70% roughly comes from only US and Europe. Now, are these two economies doing very well? Unfortunately, answer is no. Global uncertainties, these are present. There are some recessionary fears both in US as well as in Europe. Now, what could happen because of this? If there are recessionary fears in these countries, could they cut back on IT spending? Obviously, it's yes. Now, if they do that, are they going to give lesser contracts to us? Will there be lesser outsourcing? Yes. And can that hurt the top line as well as bottom line for Indian IT companies? Answer is again yes. Now, could this be seen in the numbers? Absolutely yes. We are going to discuss about numbers in the coming sections of the video. But right now, what am I going to do? I'm going to show you a snapshot of top 3 companies, that is TCS, Infosys and Wipro, and we'll understand about some key points which has been specifically mentioned in the management con call of all these 3 companies. So what can we see here? TCS says there are delays in discretionary spend. What is the word? Delay. So the clients are delaying, clients from where? US, Europe. They are delaying the outsourcing work. Delays in discretionary spending. Infosys says delay in large deal ramp ups. So they are saying there are not delays even in smaller deals. Larger deals are also getting delayed. And Wipro says delayed client decisions. They are delaying the decisions itself. What I've done, if you can see, delay, all these 3 words can be seen, I mean 1 word can be seen in all the 3 cases, right? Will that impact the guidance in for the coming financial year? Unfortunately, yes. How can we see that impact? For TCS, they have not given any numeric guidance for FY26 growth. For Infosys, they are saying we expect to grow at 1.5% to 3%, which is pretty less. And Wipro has also not given any numeric guidance for FY 2026. Now, I hope you have understood this first point. Is there anything wrong with us? Are we delaying the project execution? It's not a problem because of us. It's not impacting the IT sector. There's no problem which is in our hands. This is a problem beyond our control. It's mainly because of a sluggish tech spending and weak client demand from US and Europe. Moving on with the second reason, which is margin headwinds and mixed earnings report. Now, I've told you the first point, the demand itself has dropped. Because of which, would it hurt the top line? Yes. Is it going to hurt the bottom line as well? Absolutely yes. So what I'm going to do, I'm going to show you the entire Nifty IT constituents, almost 10 IT constituents, but we'll focus on the top 5 6 which are large caps, IT large caps. Have a look at this table. Now if you see here, TCS, Infosys, HCL Tech, Wipro, LTI, Mindtree, Tech Mahindra, all these are what, large caps in IT. Now, if you see here, Q1 YOY revenue growth, TCS 1.3%, Infosys 7.5%, HCL Tech 8.2%, Wipro 0.8%, LTI Mindtree 7.6%, and Tech Mahindra 2.7%. This is a pretty saddening YOY growth. Absolute, all in single digits, all big IT names in single digit revenue top line growth. And if I were to understand about the Q1 YOY profit growth, you can see here TCS roughly 6%, Infosys 9%, HCL Tech down by 9.7%, Wipro roughly 11%, LTI Mindtree 10%, Tech Mahindra has done well with 32.6%. But of course, we have not dissected each and every element. Was there any exceptional item or something like that? But all in all, even YOY profitability is also not really amazing. Single digit for TCS, Infosys, and HCL Tech though is in negative. Now, if you have a look at two numbers from the mid cap space, one is Persistent and one is Coforge. Persistent top line growth is at 21.8% Q1 YOY, Coforge 56.5% YOY. And if you check the profitability numbers also for Persistent, YOY Q1 profit growth has been at 38.7% and Coforge at 88.5%. Now, of course, we'll not dig down deep, otherwise, we'll start company analysis for Persistent and Coforge. But if I were to sum it up in one or two sentences, majorly their top line has grown because of aggressive expansions via acquisitions. And also, one more point is that they have mentioned that we have focused more on mid-sized clients. They have focused more on faster turnaround deals, and also they said that we have a lot of deals with non-discretionary technicians. So all in all, if you look at these two companies, they have done well, but barring these two companies, none of the other IT companies seem to be doing extremely well. Now let's move on with the third point, which is FII selling pressure. If you have been watching my Thursday live streams regularly, you already know that FIIs are on a selling spree. But which is their favorite sector for selling? It is unfortunately IT. If you have a look from January to July, oh my god, they have been continuously selling. February was small positive 804 crores, June 1166 crores. But look at the selling. July was 19,900 crores worth of selling only and only in IT. Now, if I were to total this up from Jan to July, FPI net outflow is around 50,500 crore rupees. Is that pretty bad? Absolutely yes. But if you have a look at the November and December figures, this is surprising. They were net positive in November, 5,500 crore plus. In December, almost 9,000 crore plus. So I can say that in November and December, they have done good buying. And in January to July, they did good buying. That is what the strategy looks for financial institutional investors. But of course, it is pretty clear that they might have also foreseen all these problems, and because of which they ultimately started selling heavily in this space. Let's move on with the fourth point, which is AI disruption, anxiety, and shifting sentiment. Now, there are multiple points inside this point also. Now, what's happening right now? Despite being at the forefront of AI adoption, this sector is also facing fears around job automation, something like layoffs, structural disruption, and this is making investors cautious about the near term returns. Is there any automation threat? 100% yes. It is felt that AI can actually replace repetitive coding, testing, maintenance, and support work that forms a large share of Indian IT exports. Even generative AI is advancing enough to handle complex coding, architecture, and even consulting tasks. One more point here is that client self sufficiency. And what do I mean by this client self sufficiency? Now, US and EU clients, they are actually building in-house AI teams which will effectively reduce the outsourcing need itself. So you can imagine, rather than outsourcing, if they are building that capacity as an in-house capacity, is the outsourcing work going to reduce? Yes. Can that create a problem for IT sector in India? Unfortunately, yes. On top of that, what is the problem? There is a clear skill gap in millions of Indian IT employees who are trained in legacy skills and unfortunately are yet to upskill themselves to suit the latest technical demands that the industry is demanding per se. One more point is that there is a very fast disruption cycle. Now, what we thought was maybe AI will take like 10 plus years for this entire disruption, but I'm sure everyone will agree with me that this disruption has already started at a crazy pace and it could be felt at a next level in another 2 to 3 years. It has already started kicking in, but in next 2 to 3 years, I can't even imagine what AI can do, right? Moving on to one final point. Now, all these points I talked about AI. Now, all these points combined with market sentiment. Is market overreacting? Possibly yes. Why? What typically happens, understand, stock prices often fall on disruption fears well before the actual revenue declines. So we always say that market sees what could happen in the future, and that is why it discounts that point. So market is currently seeing this, foreseeing this, that because of this AI disruption, IT sector can well go down. And ultimately, the fifth point is, yes, you read it right. Let me know your thoughts in the comment section below, because I feel that, see, it's not about spoon feeding. If we just go on listening and just blindly accepting whatever someone else is saying, that should not be done, right? We should think what could be one more reason why this entire IT space is not doing well. So I want you all to do some homework. Check few annual reports, or if you want, now these days AI can also do a lot of stuff for you, but at least try and see what could be a reason other than that what I discussed right now. Let me know in the comment section below what you feel could be the fifth reason. Also, I want you all to tell me, what do you feel, can the Indian IT sector survive this age of AI or not? Let me know your thoughts. I hope you found a lot of value in today's video. A short and sweet one, but I hope you loved it. If you did, please don't forget to smash the like button. Please don't forget to share this with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.